Back to the channel Trading Simplified. In today's video, we are going to review all four of Fidelity's zero expense ratios, including their large cap FNILX, extended market FZIPX, total market FZROX, and international FZILX. So there are advantages to this. The zero expense ratio, that's what primarily lures people to buy these, is that you pay no management fees over decades, which can lead to significant growth over time because you don't have fees getting in the way of it. You get broad market exposure. The FZROX offers broad U.S. market exposure, including small, mid, and large cap stocks. FNILX is large cap U.S. companies only, which mirrors the S&P 500. Then you have FZIPX, which mirrors mid and small cap stocks. FZILX goes international markets. Now let's get into it. Let's break it down. At FNILX, the Fidelity Zero Large Cap Index Fund. This is a no expense ratio, no minimum investment required. It currently trades at $21 a share. As we look over here at the performance on the right side of the screen, last year it mirrored the S&P 500. It earned 25.47%. The last 3 years, 8% average, 5 years, 14%, and the life of it, 13%. Excellent fund to be throwing your money in, not paying any fees, and getting 13% a year. Average, very strong. So looking at it, it's a large blend, 0% expense ratio. The top 10 holdings: Apple, Nvidia, Microsoft, Amazon, Meta, Tesla, both Googles, Broadcom, Berkshire Hathaway, making up 36.62% of the total portfolio. FNILX holds 511 holdings, which is very similar to the S&P 500. To look at the fund overview, mainly information technology at 32.91%. It normally invests 80% of the assets of common stock in large capitalization companies, including the U.S. Fidelity Large Cap Index Fund. Now, this is an excellent fund. There are pros and cons to this, which we'll get into later. The performance and returns, just so you can see it on a bar graph that we reviewed from the 1 year, 3 year, 5 year. And there is no 10-year yet because it has only been around since 2019. It is currently 2025 at the timing of this recording. And the life of the fund, 13%, which is excellent. And if you're just comparing against the benchmark of the S&P 500, this does an excellent job doing that. The 5-year has a 4-star rating out of 1,100 funds. And just looking at the composition more detailed, information technology is 32.91%, financials 13%, consumer discretionary is 11%, healthcare is 10%. Feel free to take a snapshot if you want to see just the energy, utilities, real estate, materials, etc. The style is a blend in growth, and that's a very good investment approach for the long term. Looking at the asset allocation, it is in all domestic equities. Basically no international equities. Developed markets is 0.58%. And just to show you here, United States, 99%. Let's take a quick look at the fees and distributions because that's why we're all here. You have expense ratio, $0, which is excellent. Now, what you have to get into, this is one of the big differences, is I want you to notice the dividend history. The dividend history only pays once a year in December. So as you can see, you have 2024, 2023, 2022, only pays once a year in your dividends. You need to make a choice for yourself. Is this a good choice, knowing that I'm getting paid dividends once a year, which is around a little bit over 1.11% the last time I checked. So this is a good fund for your S&P 500. Now let's jump to FZILX. This is the Fidelity Zero International Index Fund. If you're looking to get into equities that are outside of the United States, this is definitely an option for you, and it is, once again, expense ratio of 0%. It currently trades at $11.66 per share. It has a 1-year return of 5%, so it drastically underperformed the S&P 500 by 20%. The life of the fund so far has, since 2018-19, they included these zero expense ratios, and it has given back 4.53% returns. Now let's see if it can make up for it just with the diversification. So when you look at the top 10 holdings, it holds 2,200 companies within this. It has a 10.85% allocation to Taiwan Semiconductors, Tencent Holdings, ASML, Novo, Toyota, Nestle, SAP, and the list goes on. What is the objective of this? It is investing mainly 80% of its funds within the Fidelity Global X US Index Fund. So you have to remember you're investing in large cap companies that are outside of the United States. So that is what your target is to diversify and get away from the S&P 500. As you can see looking at this chart, this fund was created in September of 2018. Looking at the performance and the risk of it, I always like looking at the bar graph, makes it a little more clearer. Over the last 1 year, you can see in the purple is your Fidelity Zero Index International Fund earning 5.33%. And then over the life of the fund, you can see it earned 4.53%. So this is comparing it to other international funds like the Fidelity Global X US, which it tracks 80% of it. It did trail it by a few percentage points, but you are paying no fees for that. So you just have to decide, is it worth it to make a little less? And it's still tracking it. It doesn't have that strong rating. It's 3 stars overall when comparing it to 600 other funds. And we don't know over time, maybe international stocks will increase, but currently the US stock market has been where to put your money for the long term and to gain that annual growth. Now, just looking at the international equities over here, you have developed markets is 73%, emerging markets is 26%. So that is what you're getting when you invest in this. Financials makes up 22%, industrials 14%, information technology 13%, consumer discretionary 11%, healthcare 8%, and if you want to take a snapshot just of the rest, feel free to do so. As you can see, it invests in large blended growth between value and growth, and these companies must be greater than $10 billion. And the regional diversification, which I think is important to look into, Europe makes up 40% of this fund. Emerging markets 27%, Japan 16.82%, Canada 8%, Asia Pacific ex Japan 8%. So that is what you are getting when you are investing. Your countries, if you want to get more specific, we've already reviewed Japan at 16%, United Kingdom at 9%, Canada 8%, China at 6%, France at 6%, and the list goes on. So when you look at the fees and distributions, you also have that 0% expense ratio, which is excellent. And you are also getting a dividend once a year. As you can see, 2024, 2023, 2022, 2021. Once a year, you get that dividend with no initial investment required. You can start with as little as, $1. Let's get into FZIPX. This is the Fidelity Zero Extended Market Index Fund. If you're looking for a little more diversification, this is another 3 out of 4 of the zero expense ratios that Fidelity offers. As you can see, 0% indicated here, has a NAV price of $14. The average 1-year return is 12%, so a little better than that international one, but we'll look at the funds and see why. If you look at the 3 years, 2%, after the last 5 years, 9%, and it's averaged a nice, healthy 7.67%, which I think is pretty strong. Now, let's move down to the top 10 holdings here. I have not heard of most of these. EQT Corporation at 0.44%. You have Robinhood at 0.43%, Carvana, MCAR, Texas. What I want to point out is notice you have 2,000 holdings, and the top 10 holdings only make up 3.65%. I like that diversification. You're not over-concentrated in one stock. You're not taking a lot of risk. You have 2,000 companies within it. So it invests at least 80% of its assets within the Fidelity US Extended Investable Market Index based on its float-adjusted market capitalization weighted index fund. Now, let's look at the composition, breaking it down so we can truly understand what we are investing in. So if you see here, the market sectors is industrials at 19%, financials at 18%, consumer discretionary at 12%, information technology at 11%, healthcare 11%, and the list goes on here. As you can see here, we are investing in small cap companies. So when you see FZIPX, you finally have broken the mold from the other 2 funds that we just discussed. You are not trading within large growth or large value. You are in small cap companies. And as you see here, you are in domestic equities. So now looking at this part here, United States, 99.67% of the investments, and the value has to be below $2 billion. Next, looking at the fees and distributions, as we reviewed, everything on this is 0% expense ratio. You just have to decide, is it worth it for you? You get a dividend. It's very small, but you get it 17 cents, 16 cents per every share you own once a year in December. That's how these zero expense ratio funds do it. You have no initial investment. So we covered first the S&P 500 FNILX, which is large cap. Then we covered FZILX, international large cap, any equities outside of the United States. Then we covered FZIPX, Fidelity Zero Extended Market, which is basically small cap index fund. Next, we're going to go over FZROX. This is the Total Market Index Fund. This is an excellent fund as well. I highly recommend this one. I personally own this one in one of my portfolios, but I just want to at least review it for you so you can be aware. It currently trades at $21 per share. It has a 3 out of 5 star rating. Last year, it earned 23.94%. The last 3 years, 8%, 5 years, 13%, and the life of it very strong at 13.27%, which is very close to the S&P 500. Now let's look at the top 10 holdings here. Very similar to any S&P 500 fund. The Apple, Nvidia, Microsoft, Amazon, Meta, Tesla, Google, Broadcom, Google, and Berkshire Hathaway make up 32.63% of the total portfolio. And what's the investment strategy? They invest 80% of the common stocks within the Fidelity's U.S. Total Investable Market Index, the float adjusted market capitalization designed to reflect the performance of the U.S. equity market. But what I like about it is it includes large, mid, and small cap companies. So instead of trying to pick through all three of these, the FNILX, FZILX, and FZIPX, you could just go with FZROX and get a nice blend of small, mid, and large cap companies. That's why I personally like it over the other three. But just comparing the difference here, you can see here on the 1 year chart in the purple is the Fidelity FZROX that we are reviewing right now at 23.94%. And then over the life of it, it earned 13.27%. Remember, these funds were created in 2018, and these are your 3 stars out of a 5-year period, which to me, I'm surprised it gets 3 stars, but that's all right. So now looking at the major market sectors, information technology makes up 30%, finance makes up 14%, consumer discretionary 11%, healthcare 10%, industrials 9%, communication services 8%, staples 5%, energy 3%, the list goes on. It has a large blend growth right here, as you can see here, and it has to invest in companies that are at least worth $10 billion. Now, everything within this fund, FZROX, is in the United States. So don't get that confused. You are still just investing in the United States and not anything international. As you can see, developed markets only makes up 0.53%, and the emerging markets only make up 0.02%. Looking at the fees and distributions, you get that nice sweet $0 that you pay. So if you're holding this over 20, 30 years, you're going to reap the reward of not paying any expense ratio. But you just have to understand that you're getting the dividend in December. Now, I just want to make it clear, when it comes to these types of funds, the Fidelity no minimums, you just have to keep in mind that you cannot transfer these funds to another account. Like, so if you wanted to move these to Vanguard or Charles Schwab, you'd have to sell the assets first. So I just wanted to quickly review that. I appreciate you guys tuning into the video. Definitely be sure to check out the links below if you want a more personalized investing experience to directly chat with me. Check out my WAP. I have that right up here. You click on that link, go right in here, and what you'll get is you get to directly chat with me. You get access to my YouTube portfolio, my stock holdings, my updates each week. I post on WAP daily. My beginner's courses. If you're brand new, why not just have everything right in order? You pay a low subscription fee of $5 a month. Very simple. You get a stock watch list, portfolio guidelines, and my announcements for stocks that I'm watching and trending. Definitely be sure to check that out. If you want to just support the channel, you can click on the membership, and you get perks to having the membership where I review different stocks only. You have members only ranges that I'm watching on stocks. And then if you want to be part of the community as well, I appreciate that as well. Check out the playlist. We have the members only playlist. We have the crypto trading on Gemini, which you can get the referral code if you're going to start trading crypto. Click on this link here. You get $15. I get $15. It's a win-win. We had a few people sign up through it, so I appreciate you guys. Thank you for the support and choosing me instead of just signing up, so we both get a benefit. Fidelity Mastering, I'm going to put the videos, this one on it, the expense ratios right on this. And then also we have the Vanguard investment tutorial, the trading 2024 tutorial, stock investing for beginners, my trading P&L 2023, and day trading if you want to learn. There's a lot of stuff on here. Just go check it out. Bunch of stuff. Make sure so when you see the symbol, go under playlists, and you'll get options to all of this. Appreciate you guys tuning in. Let me know in the comment section below what you think, and I'm looking forward to hearing from you.